Do you ever feel like your business has hit a wall and you just can't break through to that next level of growth? You're not alone. I'm Patrick Lonergan, and welcome to the Vital Strategies Podcast. Today, I'm excited to be joined by Nolan Bradbury, the founder of Bradfield Accounting and Advisory. We'll be talking about what it takes to scale a successful business, the common hurdles entrepreneurs face, and how to break through those growth plateaus. Nolan shares insights on everything from understanding your financial data to the importance of delegating and optimizing the less glamorous parts of your business operations. If you're ready to take your business to the next level, this is an episode you won't want to miss. Let's dive in. Nolan Bradbury, thank you for joining us here today. You're the founder of Bradfield Accounting and Advisory. I am looking forward to getting into our discussion today about, we'll call it founder entrepreneurs and all of the challenges they face and what it takes to scale a successful business. So thank you for joining us.
Thanks for having me. Pleasure to be here.
Yeah. So your career has sort of led you through pretty complex accounting, auditing, that type of thing. And then you said, this has been fun, but now I'm going to sort of take my talents and go serve the entrepreneur.
Yeah.
You've seen a lot. You've seen a lot from entrepreneurs and just what successful businesses look like. Can we talk a little bit, just start off at the ground level? Like, what are some of the common factors that prevent business owners from achieving their goals, and how do they overcome those things?
Yeah, so I'll say what I'm about to say because this is going to influence and it'll explain why I'm going to say the next thing, which is when I went to college, I actually went to focus on psychology. I was very interested in the way people make decisions, or in some cases don't make decisions, as the case may be, right? Mm-hmm. And at some point transitioned to accounting because, accounting, very sexy topic, and that was the lure that it pulled me over to. Mm-hmm. But what I found is that as I got sort of into the profession itself, there's studies out there that show that accounting is like the least enjoyable part of running a business. Finance, tax, kind of all that in there. And so if you understand how humans behave, right, which is we avoid things we don't like, then you can kind of create this formula, which is, well, I don't like accounting, so I'm going to avoid it. And fundamentally, the problem with that, right, is that even if you don't like it, I think most people would acknowledge it's still a critical part of your business. Yeah. But because you don't like it, it's not a priority. You don't focus on it. You probably don't share the interest in it that you should. It's just sort of an afterthought in your business. And that is kind of where most people get off sideways on this, is that it isn't something that they want to lean into, right? Revenue is cool and fun to talk about. Marketing leads to sales. That's cool and fun to talk about. Accounting, you guys just tell me no to everything. Like, why do I want to deal with that? Yeah. And so as a result, right, you end up in the scenario where businesses are just kind of neglecting it more than anything, right? And they don't appreciate where it can actually help them. It's not just a cost center. I know it sounds silly to say, but it really can help drive profitability and cash flow within a business.
Yeah, no, I love that. And because I think we see this regularly with our clients, and I really don't get excited about somebody that says, yeah, we've got $100 million. We got $100 million business, meaning they got $100 million of revenue. I only really care how much falls to the bottom line, right? Like if 1% of that 100 million makes it to the bottom line and you make $1 million a year, and then somebody runs a $3 million business that, 50% falls to the bottom line, like give me that simplicity with the $3 million 100%. Business over the $100 million business. And so I think those things are really important. So can we talk a little bit about scaling? Like, I see scaling is challenging. What got me here, like I might have been, if we think about I'm a founder, I'm sort of hustling. I'm doing it all myself. But to some level, that doesn't scale because I need to start bringing more people in, more systems. And so can you tell us, where do people go from here? How do they scale and get to the next level?
Yeah. So whenever I start working with a founder in particular who's trying to get to the next level, usually they've hit a plateau in some capacity where like, I've got it to here, I'm trying to get it to here, I don't know what's going wrong. I kind of start with this idea and explain it to them. Maybe you're familiar, maybe you're not. It's the idea of the rule of 3 and 10. Not my idea, wish it was, but essentially the idea that as you move in scale from 1 to 3, 3 to 10, 10 to 30, 30 to 100, and so forward, and it could be revenue, it could be people, it could be kind of anything that drives your business, that what got you to the last milestone is not going to get you to the next milestone. Mm-hmm. Now that sounds very simple and obvious, and yet as business owners, we often fall trapped to this, which is I led this by doing A, B, and C. And so that got me to 1 million. It's going to get me to 3 million. And the answer is it's not most likely. And so what we have to do is we have to shift your mindset. You want to be a $3 million company, then as silly as it may sound, you have to behave and act like a $3 million company, which is you have to change your processes. You have to change your marketing techniques. You have to change the way you're thinking about your financial data. All these things break in a good way because it allows you to be more economical and more scaled to get to that next level. And scaling is not easy, but I think it is very important to understand that part of scaling is actually behaving like what you want to be. You can't just wake up one day and you're like, well, I went from 1 to 3 and nothing changed. It's like that rarely works. Like that's the unicorn company, right? And what often happens is you have to do these other things. And so part of that scaling, at least from a financial perspective, is you have to sort of up level your reporting. You have to up level the attention that you're giving to it. You have to view it as something strategic, again, not as something that is a cost center.
Yeah, that's great. And I think if I'm going to go back to your psychology, starting in college with psychology, I think there's a lot of psychology that starts here too. There's something about the business owner that has a compelling vision for the future that's willing to put up with all of the crap that comes with scaling the business, because it's so much easier to just go back to the default. Like, I'm just going to go back and sort of live comfortably at this rate that I'm at versus go, I'm going to put up with whatever comes my way. And the good news is like when we have good data in front of us, we can quickly analyze what's working, what's not. Like, we've seen some clients that have thought they were profitable and they weren't. They were, it's a little bit of a long story, but they were running their books on accrual, which we think is great. That's where you should run it. But they weren't like, they had all of these, all this outstanding AR that they just weren't collecting. And it was like, nobody was sort of on top of it. And it was like a huge swing in their like net bottom line. And it was like, okay, we've got to like pay attention to the cash and actually how it's coming in and who's watching accounts receivable and all those different things. So there ended up being some sort of like fraud going on in the CFO seat. And so it was a bigger problem than just, how they were looking at the books. But it's like, that's where I can see a ton of benefit of having some other set of eyes on the data. And so they can help, go, hey, there's something funny going on over here. Let's dig into that. So,
and I also think similar to what you described about profitability, like it's surprisingly often that we run into a situation where we'll talk to someone and we'll say, okay, walk me through what is your primary service or product that you're providing? Why is that? What's the profitability on it? And there's always this sort of ancillary thing that they're doing. And what we often find is that ancillary thing is way more profitable than they realize. And in some cases, more profitable than their main product or main offering. And they have no idea of that because they're not actually monitoring any of sort of the underlying data. It's all intuition and gut driven. And like, not saying that intuition shouldn't be a component of decision-making and the running a business, but to ignore what the data is actually telling you in those moments, and even more so to not have the data to even ignore in some cases, right? Like, that is where, unfortunately, a lot of great businesses slow down or fail because simply they just aren't looking at all of what they should be looking at.
Yeah. So to sort of geek out on that for just a second, would you say that in that scenario, like all of the revenue is just coming in as like a single line item? We'll call it sales, right? And it's not broken out at the product level if they have like, let's say 3 different lines of business, and then they just really can't tell. They're just seeing all the revenue come in and they have no idea like what's making them money and what's not. Is that?
Yeah, I mean, that's what I have found. That is true. What I have found is that people are, because revenue is cooler, people tend to be a bit more aware of like, oh, I should break this revenue out. Maybe they got different accounts for it. Where I see it though, more often than that is maybe there's no cost of goods sold. We were kind of talking about this before we hopped on here, right? Or they aren't allocating headcount costs to the various products. And they think it's just a 50-50 split. I was actually working with a client on this the other day where they were allocating all of their payroll 50-50 between overhead and direct costs. And I made some tweaks, got much better data coming out of payroll, and it was closer to like 75-25.
Yep.
Now, it's still a bottom line, same amount, right? But to understand how much you're actually spending on like product driven like expenses, like that can actually make a huge swing in how effective and efficient you think you're being, which then now you have an operations component to be looking at, right? And this is, I think, where we tend to ignore what the accounting and the finance data can tell us.
Yep. Yeah, no, I love that. And I'm right now we've got a few clients going through some acquisitions, and I'm just seeing how valuable having these costs broken out is when they're looking at buying. And they're able to go, oh, okay, I see the opportunity in this business to, with some redundancy in this arena, we can get rid of some of that. Or so, yeah, it really is valuable to have really good data, because let's say I'm trying to sell my business. The messier my financials are, the less I'm going to make on that, because the buyer's taking on a ton of risk in that scenario, and they're going to go, yeah, I don't know. When I don't know, I'm going to just give you this really low price. And unless there's some PE firm or somebody else that's coming in that really doesn't care about how you're operating your business, and they only care about the top line, it's not going to work out very well. So
it is amazing how, not amazing. I mean, I understand it, but like when someone's doing a succession planning or they're getting ready to exit and they don't really appreciate how important it is to have like a very nicely, like, here's my due diligence pile for you. Here's a bow on it. It's everything you wanted. Let me hand it over to you. And what you don't appreciate is the less time the other side has to spend looking through that, the greater the likelihood they're not going to do more with it, which means you get to keep the number you keep, right? Every time they have to look deeper and deeper into something, they're just going to get a discount. They're just going to come back to you and point to all these things that exist. Or I run into this a fair amount where people ignored sales tax liabilities. And you start getting there, they're trying to sell, and someone's like, well, you haven't filed in all these states. Yeah. Well, guess what? If I'm taking over the company now, I have to pay those. Like, You don't just get to take that money. Like, we got to adjust the working capital costs down on this. And so it is like, to some extent, you pay now or you pay later.
Yeah.
Unfortunately, and that isn't always realized when you're trying to plan on that.
Yeah, this is good. So I guess my question is, how does the business owner, because I've got a client right now that's got some messy books, and it's one of those things that just is never entering the top 100 things he wants to deal with, right? So how does somebody take it from like a mess to where they can effectively leverage the reports and the accounting data to manage their business?
Yeah. So, I mean, the obvious simple answer, right, is the data has to be usable. I mean, we joked again at the top of this, like garbage in, garbage out, right? And so it is totally understandable that as the CEO, leader of a company, that you are not really thinking about whether or not the deferred revenue is being captured correctly on your income statement, right? And nor should you to some extent, right? I appreciate that, but that doesn't mean that it isn't a concern of yours. To me, it's kind of this idea of delegating versus abdicating. And a lot of leaders will abdicate this stuff because they don't want to do it. Whereas you need to delegate, which means you're still ultimately responsible. You're still holding other people responsible, but it doesn't mean you have to do it. And unfortunately, that's a distinction that doesn't always exist. So you get the first thing is getting the data cleaned up and like actually usable, right? And then I think it becomes an easier proposition for the leadership team to understand the value of it, because then you can start to present data and ask questions as part of these conversations in ways they didn't think was possible to talk about it. And when you say, like, not only is that a question you can ask, but I can give you an answer now, you can see the eyes kind of expand, and it's like a kid on Christmas going, ooh, this is some shiny toys here that I can finally play with, right? Like, I didn't really know that I could get these answers before. And a lot of it too is like reframing what the strategic conversation should be. I'm sure you've run into this where the P&L has like 100 lines on it. And you're like, how in the world are you disseminating and understanding this information in a way that is usable in any capacity? And the reason is because they think the only way they can get an answer is to see it on the P&L. When in actuality, what you really want to do is create a reporting structure where You can look at a KPI or a specific account line and go, okay, this doesn't really jive with what I was expecting, or I'm concerned that it's this level. What is going on there? And that someone is tasked to go find the answer and report back. That is actually how a very successful, effectively run company operates. It is not front and center staring you in the face, trying to pound you over the head. And so when you start to make these sort of like smaller changes all across the board, it really alleviates a lot of the things that prevent someone from utilizing this stuff in any meaningful way. And then it starts to sort of snowball, and it really takes on a life of its own.
Yeah, I love that. And like we had one client that had, I don't remember how many categories of marketing they had, but it was too many. And it was like
one for every type of marketing. Yes. It's like Google, Facebook, like LinkedIn.
100%. And it was like, okay, no. We're going to like just put this all under marketing. And then if we need to go do a study, like we can dig into the data, and find out where all the expenses are going and go, all right, we're spending too much over here. Let's fix that. But I feel like when you're looking at everything, you're looking at nothing, right? You can't see what the real metrics are. And I love what you're talking about with as far as like a dashboard and some KPIs. Like, for example, one thing we really like to look at for clients is we take last year. So we love looking at it month over month. I feel like 12 months of data just doesn't tell me a whole lot of anything. So look at it month over month. And I like to know, okay, compared to the same month last year, are we up or down? And then how are we doing compared to last month? So if I have two negatives, if I'm down over last year and I'm down over last month, like we should have like alarm bells going off. Like, okay, we really got to pay attention to what's happening in the business, because we either have too much expenses or we're not, selling enough product or something. We've like got to get involved here. But I like some of those like high level KPIs, like, okay, what's going on? And then from there, I can start sorting through, and figuring out like what are the key things that are driving these negative numbers in this situation. So yeah, is there
100%.
Anything that you're seeing that you're like, hey, these what we consider KPIs that every business should be looking at to make sure that they're profitable and moving in the right direction?
Yeah, I mean, it's a bit of a tough question, right? Because based on industry, based on, I'll say, personality of the executive team, like you do want to cater. I actually think this is a place where accountants really do themselves a disservice, which is they seem to forget that their audience is not another accountant. And so what they give is really tailored to themselves or someone who speaks their language. And in actuality, most executives, they understand finance and they understand accounting, but not at the same level, right? It's like they're speaking Latin and the executive speaking like intro to Latin. And it's like, okay, like you got to help bridge the gap here a little bit. So one of the things we always like to start with is we want to actually interview the leadership team and understand, how do you view the business? Like, what is your interpretation of, like, explain to me how you make money, explain to me how you spend money. And again, sounds very simple, but it does provide a lot of insight into how people think about the way this is run. And then what you can help do is tailor the metrics to those interpretations, right? And you make sure that like they're answering the questions that they have, right? And that you're actually giving them the answers, but then you're filling in the gaps where they're maybe not thinking about the things in the ways that they would want to. And oftentimes some of that is around things they don't necessarily associate with the financial reporting. Like I always think that there should be some aspect of sales or lead generation involved in this. Like, great, you had this revenue. How much time and money did you spend to get this revenue relative to what you spent last month, right? And it's not just what you spent on Google ads. It's what does your funnel look like? How long is that taking? Like when someone drops in, when do we see that actually pop out on the other side? Because part of your cash flow planning has to be, okay, I could sell business. Someone could come in and I could take a sales call tomorrow, but if it takes 3 months for me to get that money, well, that's a very different equation than if it's like they close the next day, right? Understanding your burn rate and your run rate on some of these things is critical to this. And so I think there's elements like that. I also think there's some efficiencies. Like if you're a service-based company, what is your utilization? What is your billable rate? Like understanding the back end of the underlying data. It's not just about, what was marketing for the month? Like, okay, that's helpful, but you need context to all of this information as well.
Yeah, I love it. So I guess in your firm, how do you, because I think the relationship is so important. I meet with my bookkeeper once a month to just sort of talk through like, hey, here's some data I'd like to see, right? Or I've got a question about this thing, or maybe next time let's, categorize this other thing a different way. So can you talk a little bit about what a successful relationship looks like with your accountant / bookkeeper / CFO, whatever we want to call it, that can just help us, maintain good information, good flow of information?
Well, first off, you sound like a dream client if you're willing to meet with someone once a month. That's amazing. The relationship, I think, is about are you bringing curiosity to the table as a client? Like, are you asking questions and actually like wanting to engage in the conversation? I would say, unfortunately, a lot of the time it is leading the horse to water rather than the alternative to that. And I think that is a critical component to it. I think that that relationship is really built upon trust as well. And so, how can I demonstrate to you that you can rely upon me? And that doesn't come immediately. It comes over time. Yep. But I think the other piece too is that helps build the trust and helps build the natural curiosity is kind of something I alluded to earlier, which is, am I meeting you at your level? And whatever your level is, that's my job as a professional to help you at that point. Yep. And that doesn't mean like you're not smart. It doesn't mean you don't know things. It's that, how do you interpret it? Like, do you like me to write a write-up in an email and send it to you? Do you want me to do a quick Loom video that sort of explains what happened? Like, what is the way that is the best to engage with you? It's like, what is the best diet to do? The one you're going to follow. Like, that's kind of the answer to it, right? So it's like, to some extent, we have to get past what are the barriers that you're going to put up so that it's not something that you just immediately back off of. And so again, when I can meet you at wherever you're at and understand the type of engaging you want to do, then it becomes an actual relationship. Like you're going to meet me, I'm going to meet you. And it actually is that, as opposed to a one-sided conversation a lot of the time.
Yeah, no, I love that. And I think one thing that's fantastic to acknowledge is the most successful business owners are totally dialed into their financials. It's we think about the book, The E-Myth. It's the baker that thinks they can bake or loves baking, and so they're going to go open a bakery, versus somebody that sees an opportunity in the bakery market, and they're going to go hire a baker to run to bake the pies, and they're going to run the business side of it. And so I think a lot of times the technician ends up in the business and they don't care about the financials. They're like, I'm just trying to build a better mousetrap, bake a better cake over here. And so I think if anybody wants to like take their business to the next level, you've got to get your financials dialed in. You've got to pay attention to your financial data, because it really is the roadmap that can help you make quality decisions. So you can go, oh, hey, I'm actually losing money on every single one of those products that I'm selling. We're just cutting that product line. It just needs to go. Oftentimes, people don't know that data from just how they're running their business. So that's sort of I don't know.
No, I mean, I think you make a really great point, which is, and I think for a lot of business owners, I'll say smaller business owners, right? They got into business because they were really good at something, and they realized they could probably make more money if they were doing it on their own. Yeah. Or at least there was greater upside. The challenge with that, though, is that that's kind of the extent to their knowledge of that business. Yep. And there's no shame in that. It's not like it's not like you failed the high school class that explained how to run a business, right? Because it doesn't exist. It doesn't exist at the college level. It doesn't exist at an MBA level. Like, it just doesn't exist. It's a bit of the school of hard knocks, if you will, right? And so if you're open to acknowledging that it isn't your strong suit, well, then what that allows you to do is work through maybe the shame, if you will, of hiring someone to fill a space that isn't your like your area of genius. And the other part of that, I would say, is you can be good at finance, and that doesn't mean you should be doing it, right? I always tell people, what is the thing that only you can do within your company? Because that's really where you should be spending your time, and let people like delegate the other stuff so that then you can come in and provide the input that only you can provide and provide the feedback that only you can provide.
Yep.
And finance is one of those key places.
Yeah, I love it. Okay, so let's dive into the finance piece for a second. I think there's, we'll call it levels of what my finance team should look like. I think on the baseline level is I go, outsource bookkeeper, right? And then as my business grows, I might need to bring a staff accountant in. And then eventually I have a controller, and a controller, if we think about how to define some of these things, staff accountants getting the right numbers in the right boxes, right? Coded correctly. And then the controller's going, hey, I can actually pull some of these levers. I'm going to be, moving some dollars around, that type of thing. And then the CFO is really creating strategy. Like they're going, hey, I'm looking at all the data, synthesizing it and going, here's the most efficient way to do X to grow the business. So can we talk through I clearly don't need a CFO, and this fractional CFO term I think is thrown around quite a bit, but I don't need a CFO when I'm a relatively small business. I need good bookkeeper. And then we sort of progress along this path. Can we talk a little bit about just how you see somebody evolving through those steps? And I don't know if it's revenue numbers or what as to when they should move from, one role to the next.
Yeah, so great question. So when you're starting out, I'm just going to assume you're starting from square zero, like you're kind of coming into this new. I have clients who, I had a client the other week, I met with him starting a new business. It was kind of a consulting business. And he was like, well, do I need to set up a QuickBooks file and do all this? And I was like, well, tell me what you're going to be doing between now and the end of the year. And he told me, I was like, honestly, no. Just make sure you deposit all the money into your one business bank account. Make sure you spend all the money out of the one business bank account. And quite honestly, at the end of the year, I can do what you need to do to get the answers that your CPA is going to need to prepare the tax return. It's like, you don't need to spend more money than that. Now, there's a tipping point, right, where that's no longer going to be sufficient. And it isn't the amount of money you're making necessarily, it's the complexity and the initiative behind those transactions, right? So are you trying to scale this business? Are you trying to evaluate if you're spending your time in the right way? Are you trying to evaluate new opportunities? Then you probably need someone else entering the data, because it is very hard to wear the detail hat and the strategic hat at the same time. The context changing between those two roles is so challenging that it just often leads to failure. So that's kind of that first piece, right? And then to your point, when you move beyond that, so maybe you've hired a bookkeeper, now you get to a point where is it more cost effective to have someone dedicated on my team because I can get it faster, I have a bit more input and control over it. Maybe they can do some other things along with that it's cheaper to do that than it is to hire a bookkeeper. That is a bit of a cost answer, and that's in most cases there. And then when you're starting to layer on top of that, again, then you're getting to a point of I need people reviewing the work, I need level of complexity, I need someone who's acting as a bit of a translator between levels, right? Like the CEO probably shouldn't be talking directly to the staff accountant, not because they're not capable of it, but it's like they're speaking different languages and looking at things from different perspectives. And so that's where a controller or a CFO or fractional CFO, whatever you want to say, can help bridge some of those gaps.
Yeah, that's great. So one thing that I was thinking about is we've got some clients that their brain likes cash accounting. They're just like, look, I get it. Dollars in, dollars out. Like it doesn't take a rocket scientist to figure out, the math there. But I think oftentimes, especially when we start looking at, if I'm interested in selling my business, that type of thing, I should probably be over on a accrual because, there's things I pay for like insurance, right? That I might pay an annual payment that, is going to cover me all year. And so I should probably account for that, that way versus same thing with bonuses and some of those other pieces. Like it can make a lot of sense to spread some of those out. Is there, I'm just trying to think through I don't know if you have any good thoughts on how to get people to go, hey, we're going to make this transition from cash to accrual, and here's why we're going to do it and why it makes sense. Because I see we've got some clients that run very successful businesses that are still hanging on to cash accounting, and it's I think I'd like to encourage them to flip over to accrual, because I think it makes more sense in big picture long term. But I don't have a good sales pitch for why they should do it. So maybe you don't either, but I thought I would ask, see if you've got some wisdom for me there. So
yeah, it's a great question. What I have found a lot of times that the best sales pitch is when I tell them I can't do something because this doesn't exist.
Yep.
I know that's kind of cheating, I realize, but like it is oftentimes they're like I had a dentist who he does a lot of very large sort of like cosmetic based surgeries and that. And he had a few like just huge months, like where he was like doubling revenue, and then revenue went down and he like freaked out. He's like, oh my goodness, like what happened?
Yeah.
And I was like, well, you took like $500,000 in deposits last month and you haven't done the work. And so then the work was done the next month and that's when all the costs occurred. And I was like, so you have this mismatch. And he's like, well, can we fix that? I was like, absolutely, we can fix that for you. And I was like, so then you can have that conversation, right, where they understand now the benefits of it. I think a lot of the challenge is that if you're not an accountant or maybe a more sophisticated financial person involved in that, cash makes a lot of sense, right? Like it's the easiest to understand. And so to some extent, you also have, if you're going to encourage someone to make that switch, I do think you have a responsibility to teach them how to utilize that. Like you can't just give them the tool and then walk away. You need to explain to them like, okay, so this is why we're going to do this. And this is how you're going to need to interpret it. And in a lot of cases too, I mean, like I will still give them cash information from time to time. Like, okay, here's the accrual. Let's also look at the cash, just so you have an idea of like money in, money out, just as we sort of bridge this sort of like transition period for you. And also, I mean, truthfully too, some people still file on a cash basis for tax purposes. And it's helpful to be able to see that and go like, well, what is actually my tax liability looking like right now? Even though I file on a cash basis, but I may be looking at it from an accrual basis.
I love it. Very good. So Nolan, is there anything else we should talk about as far as like outsourcing goes? I think I think about my business and we have a number of W-2 employees, but then we've also got some pretty important functions that we've outsourced because it's like, I can just go hire that entire firm and that knowledge base over there that I couldn't hire for the same dollars that I'm spending. You know, I get to leverage like lots of different folks. Is there anything else we should talk about that you see from an outsourced perspective that makes sense?
Yeah, I mean, I think you hit it on the head, which is there is this, like, say you hire a bookkeeping firm, even you don't think of a bookkeeping firm as even having this necessarily, but like part of what you're getting is you're getting a staff controller and CFO kind of all in one fell swoop, but you're not having to pay for each of those individual pieces. You're also probably getting a higher level of sophistication and experience and knowledge because that person is working in this industry than you could probably afford on a standalone basis. Yeah. And I think then it also then translates to other areas where you're just not an expert in. Like, I jokingly, it's like a Yogi Berraism, right? Which is it's hard to be an expert when you're not an expert in it. Yeah. And so it's like, there's a challenge, like how do you evaluate the hiring of the person when you don't really know what they should be qualified at? How do you, how do you bring in and identify the risks that you have and all of this? And so, the outsourcing too, I mean, there's another component of it, right? Which is, it's way more expensive to have a person in-house do something than it is externally usually because of all the overhead costs and that. Yep. Benefits, bonuses, all those sorts of things. Right. That all gets absorbed by whoever you're outsourcing it to for their people. Yeah. And then if you just want to make a change, you're not satisfied with the outcomes. It's much easier. It's so easy to go, hey, we had 30-day notice or 60-day notice. We're going to go find somebody else. And then, I don't have unemployment and all these other, costs that are hanging out there. All right, good. Well, I think this leads us to at Bradfield Accounting and Advisory, the advisory piece, you do some like family office type work. Can you explain what that is and what that means? And then we'll dig into that from there. Yeah. So, I think when most people hear the word family office, they think of like the show like Succession, that level of like family office. That's not what we're really talking about here. I kind of jokingly refer to it as family office light. And so what we're really talking about here is ideally there's this point in a founder or business owner's life where it's not that they don't want to make another dollar. It's just that isn't the most important thing anymore. And so it's like, when is the next hour that I spend more important than the dollar that I could make in that time?
Yep.
And really what we're allowing them to do is kind of buy back part of their life where they have a fair amount of, I don't want to say risk, but for lack of a better word, risk, right? And so what we do is we help organize and coordinate and hire for them people in the estate and planning realm, in the legal realm, in the tax and bookkeeping realm if necessary, P&C insurance, life and D&I. We'll go out in some cases and coordinate a car for them, like they're trying to buy a car, and we can hook them up with the right people there. A lot of it is, if you reflect upon your day-to-day life, the things that often don't get done, the reason they don't get done is the starting. I have to call someone. I have to research this thing. I have to find the phone number. It's amazing how little trivial of a pebble it is that prevents us from making that action happen. And for your personal finances, that can have really compounding effects. And I don't mean this as like a scare tactic, but it's like, I recently had a client who unfortunately passed away very unexpectedly. Did not have an updated will, did not have a trust in place, did not have a lot of the things. And unfortunately, her business went into probate. And people couldn't get paid, bank accounts were frozen. And I know that's not what they would have wanted. And I know that it wasn't that they didn't think it was important. They just didn't think it would happen to them at that time. And unfortunately, and as hard as it is to think about stuff like this, we don't have control over that stuff. And I don't want to see someone's heart. This is where this becomes very much of a passion project for me. I don't want to see someone work so hard to build this thing, this company for themselves, so that their family can have this better life. And it get undermined and derailed because, they didn't make it to the fifth thing on their to-do list, right? And that's oftentimes what we're talking about here.
Yeah, no, you're absolutely right. And you're hitting on the important but not urgent stuff, and by the time it is urgent, it can be too late. And so somebody that can identify those things and bring them to the forefront and go, hey, look, there's real risk here, and it's catastrophic risk if we don't deal with this thing. So let's get it done. And one thing that we talk regularly to our clients about is, as your wealth grows, so does your complexity, and you take on a second job, and you don't want that second job. You just sort of have defaulted into it. And so let us help take a bunch of those things off your plate, and we can sort of make sure that everything's integrated and coordinated, manage all of your advisors, and you can just do the thing you're best at. We're part of Strategic Coach. We think that methodology makes a lot of sense. And this idea of unique ability, please go just be in your unique ability and let everybody else, handle other things. And I liked, delegate versus abdicate. I think that's a key piece. You've got to stay in tune. You've got to be looking at the data. When we see people take their eyes off the ball, that's when things fall apart. I was talking about that business that had the CFO sort of running amok, and it was the owner just was yeah, he's got it. It's okay. And it's no, he doesn't have it. It's a problem. And there's just no eyes on the data. And so,
well, and I think a good maybe comparison for people, because oftentimes it's hard to relate to this situation for a lot of people unless they've done it before. But a lot of people have probably done some sort of home remodel. Maybe they built a home, right? And you have a choice. Am I going to be the contractor and hire all the subs and be there every day and make sure they show up and make sure that the work is done to the quality it needs to be done and to code? Or am I going to hire someone, do some research, make sure they're the right people, and then trust that they're going to put the right people in place and show up there every day? That's kind of what we're talking about. Yeah. Can you save money doing it? Can you get to the same place? Yes. Is it harder? Absolutely. Yep. And way riskier.
Yeah.
And then you have to ask yourself, what did I really save? Did I save time? No.
Yep.
Did I save money? Maybe, but you gave it up at the expense of all the other time you would have had. And so I think it's this very critical piece of understanding, okay, yes, maybe you can do it, but why? There's a point where it's just not the best use of your time anymore.
Yep. And I think one thing that we've found is successful business owners really start to understand that concept. I'd rather bring a who into my life versus figure out how to do it. And it just, they've learned that they'll get better outcomes and probably end up dollars ahead too, so it's,
I'll give you a very simple example of how this can work if you'll humor me for a second. So we were working with this new client, and we started by just doing a review. He just bought a house back in October, a nice house. And we were reviewing his P&C coverage, and he had coverage for 60% of his home.
Yeah.
That was it. And I was like, do you know this? And he's like, no. And I was like, okay. I was like, and he was like, well, what exactly does that mean? And I was like, kind of explaining to him like a worst case scenario, but still explaining. He's like, can we fix that? I was like, well, yes, absolutely, we can fix that. But it's like, these are the things, right? Like, I don't, and through no fault of his home, when would he have thought to look at that? Like, wouldn't you assume that someone has done this for you, that like it's been put in place, right? And yet, unfortunately, if he had a fire or there'd been some sort of like natural disaster, like he would have been screwed, quite honestly. And I just never want to see that happen to someone.
Yep, absolutely. And that's happened because we do some P&C review too. And like, you're shocked at, the amount of inflation has eroded those insurance coverages. And insurance agents are busy. They've got lots of different, and they don't spend the time looking every year. They just let them renew, and it's sort of okay. Well, to the point, like if this house burns down, it's really going to matter. You're not going to be able to rebuild what you had. You're not going to be able to go buy something that's equivalent.
Where you're going to live in the meantime.
Right. Yep. It's.
I think that, and I suspect you'd probably agree with me on this, but I would say that in most cases, we assume that the person we've hired is actively looking out for our best interests.
Yep.
And I'm going to be honest with you, unless you've hired someone who that's their job, they probably aren't. Right. And I don't mean that in a nefarious way. I don't mean it like they're bad people, but they're busy just like you are.
Yep.
And in a lot of cases, like you described, they're just kind of renewing the policy. It's not that they don't care about you. It's not, but I think we overestimate what that person is doing for us in a lot of cases because we think that's their job. In actuality, it probably isn't. We'd like it to be their job, but their job is just to have the policy there and to answer the phone when we call them.
Right. Yep. Yeah, you're right. They might look at I just like to look at people's financial incentives, right? And they look at the financial incentives of like the time and energy it would take to like sort of requote your coverage, and whether you take it or not take it. It's like, it's just easier to sort of keep it all status quo. So I appreciate that. Now I know there's good P&C professionals out there. We've got some, 100%. So do you, and they do stay on top of those things. But in general, it's.
I don't mean to besmirch the insurance industry by any stretch of the imagination. More just like, I think we sometimes, again, it's an abdication of the responsibility, right? Rather than like in delegating and making sure that what we think is happening is actually happening.
Absolutely. And I think the important thing that you're doing is you're just doing these reviews to like look at this data. I couldn't tell you what my P&C coverages are. I have no clue off the top of my head. So it's like, well, let's get them out. Let's have a reason to get them out and look at them once a year or every other year and go, all right, hey, those coverages align with what I've got going on, or no, they don't. And so I think that's an important.
And I think just to emphasize that point, right? Because I don't want this to be misinterpreted. You and I are not saying you should have your policies memorized. That is not the takeaway from this, right? It's that you should have something in place to ensure that it's being looked at in a way that you have the right coverage, right? And I mean, I will concede, I don't necessarily know all the ins and outs of my coverage. I know that when I looked at it and we talked through it, I understood it. Yeah. And that's when we decided on it, but we'll look at it again. And that's what we're really talking about here.
Yeah, I love this. All right, Nolan, this has been great. Is there anything else we should be talking about, whether it comes to, sort of understanding financials and how valuable they are to running the business, to I'll say evolving into, working with somebody like yourself to say, okay, I this has gotten beyond what I want to handle on my own. I need to sort of install this family office type structure. Is there anything else important that we should touch on before we wrap up?
So I'll throw this last piece out here because I think it overarches kind of all of those things we talked about, which is a lot of times what I find is that it isn't always necessarily the people doing the work or the process they're causing maybe friction within everything, and that you're not necessarily getting the results you want. Although that is oftentimes part of one of the drivers. But what I would encourage everyone to think about is, if this is your business and you feel like something isn't working, take the finance or accounting components of it, like really challenge yourself to ask, like, do I have an active role in this in the way that I should? Have I, like, I want this person to come and tell me what's going on. Am I also meeting with them and explaining to them my concerns? Like, is it an actual relationship or is it a one-sided transaction? There is nothing wrong with the transactional approach to that. I want to be clear about that. Mm-hmm. But if you are looking for the other, then that's how you have to show up to that relationship. You can't just sort of check in randomly and expect that to happen. I don't mean that to be judgmental or anything like that. More of just like, people wonder why they don't have a successful relationship with pick an advisor. Mm-hmm. And the answer is because you don't actually treat it like a relationship in most cases. Yeah. And that's really where we want to start and make that foundation, whether it's a bookkeeper, a CFO, or a family office, it has to feel like a relationship.
Absolutely. And if I just make the analogy to, like, if I go hire a personal trainer and I go meet with them and we talk and we have a good time together, and then I leave and I don't do any workouts, I don't change my diet, and I come back and I'm like, hey, how come you're not getting me any results? It's like, well, because I gave you a list of things for your team to go execute on and nothing's happening, and I can't, like, I can drag you to the gym, but if you're not willing to, like, lift the weights and do the work, I don't know what to do about that. So I think that's a great point. So Nolan, if people want to get in touch with you, bradfieldco.com is your website. What other ways are there to connect with the work you're doing?
Well, I am an accountant, so I have very creatively gotten the handle Nolan Bradbury on LinkedIn. You can find me there if you'd like. Cool. And then we do have what I feel is a good sort of wealth check-in assessment that I'll share with you. I don't have the URL. It's kind of a long one. Sure. But that's a good place for people to go and kind of just give you a sense of, like, am I doing what maybe I should be fully doing, or are there opportunities here for maybe to reassess, like, some gaps in myself? It's really meant to be more self-reflective and kind of give you a chance to sort of really truly be honest with how your financial house is looking. So we offer that to people. And then frankly, we have a contact us page where just reach out if you have questions. Like, I genuinely like to help people and I don't charge to talk to them right off the bat. So reach out if you have questions. I'm happy to sort of point you in the right direction or offer some feedback. You can find that on our website. Fantastic.
And we'll have links to all of that in the show notes. So if people want to find that assessment or even just get your contact info, we'll have all that there. Nolan, I do appreciate you meeting with us today. We are, it's actually tax filing deadline for entities today. So I feel like this conversation, we're recording it this day. It won't publish this date, but it's, it's always good to be talking about accounting, bookkeeping, that type of thing on a tax filing deadline. So it's top of mind for a lot of people. So wonderful. I appreciate all of your wisdom and insight. Having good financial and accounting data just is critical to running the business. So thanks for sharing that with us today.
Thanks for having me on. Really appreciate being here.
As we're getting our year-end tax strategies implemented for our clients, we wanted to give you the tools that you need to save big money on tax this year. To get access to the tools to help create a tax strategy, go to vitalstrategies.com/cornerstones. If you're one of the first 100 people to register, we'll give you free access to the tools that our clients have paid us tens of thousands of dollars for. These tools are designed to help you pay less tax so you can build more wealth and live a great life. Again, that website is vitalstrategies.com/cornerstones. I want to remind you to rate and review the Vital Strategies podcast. Your feedback helps us towards our goal of saving our clients and listeners over $1 billion in taxes. These dollars are better used in your hands versus the government bureaucracy. Thank you for listening and for being a vital entrepreneur. You're vital because you're the backbone of our economy, creating opportunities for your employees and driving growth. You're vital to your family, fostering abundance not only financially, but in all aspects of life that matter. Finally, you're vital to me because you strive to build wealth, make an impact through your business, and live a great life.